Hello everyone, welcome back to the channel. Today I just wanted to go over my favorite stock right now that I have on my watch list, and that's gonna be UnitedHealth Group. As in my previous video, I discussed that my top two favorite picks would be UnitedHealth Group and Google. So Google has been outperforming. It outperformed yesterday from the Magnificent Seven. Let me see how it did today. Okay, so it was down today, but not as down, not like the rest. So going back to UNH, you can see that I had a couple of targets. So one was at 300, I believe. The other was at 280, and the last one was at 250. So all of them did get hit today, and as you can see, what's been going on with the price action. Starting from a couple of weeks ago, it was 582, then it gapped down to 41. It's been trading downwards, then gapped down to 338, then gapped down to 274, and then went all the way down. So this today was yesterday, I believe the news was that the Department of Justice announced a criminal probe into the company. So usually this type of news usually marks the bottom because it's buy the hype, sell the news. Or in this case, if it's going down, then you just buy the news and then sell the hype. So if you can look at today's price action, it went down all the way to 249, and the buyers just came in and gobbled up all the buys all the way up to 274, which is a 10% gain from here. Now, why did it get bought over here, right? Why did it get bought over here? Now, let's go on to the weekly chart. You can see a massive wick on the weekly chart. And I highlighted this rectangle box and this over here. So you can see this area over here, this entire area has been like resistance, support, resistance, support, resistance, support. So a lot of investor memory over here. And 250 is also a psychological level, right? So the stock from its highs of 631 is down 60.66%. And in one day it got bought up 10%. What do I think is going to happen in the coming days? In the coming days, what I believe is going to happen is this at least what I think is going to happen is this gap over here is going to get filled. So that's a 12% move from here. And in total, from the bottom, that would be a 23% move from the bottom. I bought options right over here. If you go to my X account, you can see that all the way down. Bought a couple of calls over here. So I bought a couple of calls when the price was at like 255-ish. So I'm pretty up on that calls. And I expect to at least have this gap fill over here to around the $300 level, so which would also be a psychological level. And it will also fill this gap. Let's not even consider this, even though I think there's a possibility it could go up all the way to $400. But in the near term, in the very near term, like in the next couple of days or weeks, I think we go to 300. Now, there's one more argument that would support this. Look at where the price is trading right now. It's been so gapped down that it's literally trading outside this Bollinger Band over here. And whenever something trades outside of the Bollinger Band, or it usually like snaps back in. And you can see this throughout history. Let's take this as an example over here. So this example over here, around June 14th, the price traded below. What happened the next couple of days? Price went up 5%. right? And from the bottom, price went up 8.5%. And let's look at where we're at right now. It's trading outside this Bollinger Band. Look at the RSI. The daily RSI is at 11 right now. The stochastics, it cannot be any more overbought. It's literally at 0.52. The MACD, when was the last time this happened? When was the last time this happened? Look at where the MACD is right now. Let's look at it at a higher time frame. Let's look at the weekly time frame. When was the last time the RSI was at 26? The last time it was at 26 was during a great financial crisis. It was a financial crisis. And right now, it's at 26. When was the Bollinger Band like this? Before we had a bounce over here from 484 to 543. Let me put one more indicator. Let me put the PE ratio. And let me get rid of this for now. Look at where the PE ratio is trading at. Let me also get rid of the MACD for now. And stochastic, just to make things simpler. So usually the value area would be around 15 to 24. That's where it spent most of its lifetime. Right now, the PE ratio is at 11. And it was 10 or below 10 when it was around 250. So what was the price? What was the PE ratio during this time? In 2012, it was $11. Okay. What was the price in 2012? The price was $50. Where's the price right now? It's $274. So that means that this company is valued the same as in 2012 when the price per share was $55. And look at where the company's revenue growth is. It's around, what is it? 295. So this is in millions. So this is around $295 billion. Look at the revenue over here. This is $400 billion in revenue. $400 billion. Net income, it had a slight drop, but the trend is upwards. Everything is upwards. The shares are decreasing. And let's look at the key charts. Key charts, revenue by segment, everything is up. So there are multiple companies under UnitedHealth. Historical margins over here, net margin, gross margin, and Optum revenue breakdown. So you can see that everything, operating leverage has been increasing over time compared to operating expenses. So you can see everything is in the right direction. The valuations are in the wrong direction. And do you think this is sustainable? What happened when Meta had a drop? And these were the same news, like the Department of Justice did a probe over there, and there were like so many bad news over here during the bottom. And let me just move on to the daily charts just to see the gaps. Let me get rid of this Bollinger Band. Okay, so the price went from $387 to $87, and it gapped. Look how many gap downs we had. And what was the PE ratio? The PE ratio at the time was at a 10, right? And were we trading outside the Bollinger Band? Okay, yes, so we were trading outside the Bollinger Band. We were trading outside the Bollinger Band. And where did we have a bottom? When we had a hammer candle over here. This hammer candle. And so we're looking for candlesticks, right? So candlesticks show us a lot of data. And observe the daily candlestick of UnitedHealth Group. It's this. This is usually, most likely, most probably, a bottom signal. I might be wrong. It may go down a couple of more days, but at the end, I believe either we're at the bottom or we're very, very close to the bottom. And at least I would expect it to trade in the Bollinger Band again, right? It cannot stay out of the Bollinger Bands forever. So even if you take the perspective from a short term, it's still extremely undervalued and is extremely underextended. And there has to be snapback value. You cannot go in 1 month from 10th April to like 15th of May. You cannot go down 60% for a 400 or $500 billion company. You cannot go down 60% in 1 month without a snapback. This company has, and I think we're long overdue for a snapback. And I have my calls over here. I have also bought shares around this level, this wick, and look at where the valuations are. Look at where the RSI is. Look at where the stochastics are. Look at where the MACD is. Look at where the Bollinger Bands are. So, okay, you can also make this case over here that the price was trading in the Bollinger Band, outside the Bollinger Band over here, right? But was this a bottom signal? How do we know that? So, do we see any wicks over here? This was a ice cream bar red candlestick, right? It indicates that there's more downside ahead. And what did we do? The price went inside the Bollinger Band and we continued our downtrend. Let's look at over here. The price went all the way down to 439, closed above 466. Was that a bottom signal? Yes, it went from the low was 440. It went all the way. It went up 38% in the span of a few weeks. And I do think things are very underextended and they're due for a snapback rally. So usually bottoms happen when there's a lot of bad news, when there's like no more hope for a company, no more hope for a stock, no more hope for an asset. It works every time like that. When there's so much bad news in the market that you cannot believe that an asset is going to go up, and this is exactly where the bottom happens or bottom forms. And this is why I believe that more or less UNH is very close to the bottom or has bottomed or is in the process of forming the bottom. But I wouldn't see it going down to 200 or 150 or 100. That would be insane, especially for a company that's a leader in the healthcare sector. Also, in the lower time frames, I see this bullish divergence forming. So let me get rid of this and this. So let's look at this down, right? And let's look at the RSI. So price has been forming lower lows and RSI has been forming higher highs. What does that indicate? That usually indicates that there's an exhaustion of sellers now. They're exhausted and momentum is slowly building up. And I believe that this is going to play out. This is going to work. Look at the MACD. Even though price is going down, MACD has been pretty much stable over here. This is the 4-hour chart. So that's one more indication. So you can see that all, like price action, the candlestick, the RSI, the stochastics, the Bollinger Bands, the divergence, all of this is building up confluence of indicators in the right direction that we're supposed to be. So let's look at the entire healthcare sector of the SPY. Let's look at XLV. So what did XLV do today? And I also posted this on my X. So look at this, lower low, and what happened over here to the RSI. A divergence, a bullish divergence, right? This is a bullish divergence that is forming and is currently moving upwards. So I believe there's less time. There's not much time for the bottom to form. And I don't think this stock is going to wait for everyone. So if you want to hop, not financial advice, but I do consider these indicators. There are so many stocks out there, especially in the healthcare sector. Healthcare sector has been not doing good at all. It's been ranging sideways since 2023 and now down. It's the same level that was in 2021. So and look at the QQQ, the tech sector. Let me go to XLK. That XLK, it's basically near all-time highs. It is a couple of percent away from them, like 2.5, 3% away. Look at the QQQ. It's been going non-stop upwards, right? This is not a good sign. Either we're gonna have a double top or we're gonna have a pullback to fill this gap. Also, I mentioned this a couple of times on my X account. If you guys haven't already, go give it a follow. I cannot think of a single instance where we had a runaway gap up. Not one. You can go back to all the way before the dot-com bubble. You won't find a single gap up candle. Even in this many phase over here where the QQQ went from 49 to 118 in this span of a couple of weeks or a couple of months. And what makes you believe, or what makes us believe, that we're going to have this runaway gap and this gap is not going to get filled? I believe this gap is going to get filled, and much, much more. So be careful with that. Be careful of the SPY. Same thing with the SPY. Now look at the Dow. Dow doesn't have any gaps, right? Let me apply a couple of moving averages over here. It broke above the 50 moving average. It's tested at support. Here was resistance, and now it tested at support. Let me go to the daily chart. What did it do today? No gaps, right? All the gaps filled. A huge break above the 200-day moving average with a bullish engulfing candle right over here. Let's look at the RSI. The RSI is not overbought. MACD, they still has room to run. Stochastics can remain overbought whenever we have a major break of a moving average. It can remain overbought. So the Dow is looking very good. And one of the components that brought the Dow down was UNH, because it was a $500 billion company and it dropped like 60%. And I believe that Dow is going to lead the ETFs now, especially with UNH leading the sector. Look at the MAGS. This is the MAGS Magnificent 7 ETF. It was down minus 1.14%, and the Qs were up. This is usually not a good sign. MVPs of the market have to act like MVPs of the market for the market to go up. So if Apple, Amazon, Meta, if these companies are not going to be participating, then we're not going to see all-time highs, because that's what, unfortunately, these ETFs are not equal weighted. They're weighted against the market cap. So this is one of the reasons that was a brief overview of the market. Just wanted to share my thoughts on UNH. If you haven't already subscribed to the channel, follow me on X. It's Decrypt Samir. I'll leave a link in the description. And if you have any chart requests, let me know, and I'll see you in the next one.